All right, let's bring in Kevin Hassett, my great friend, former chair of the Council of Economic Advisors during the Trump administration. So, Kevin, it's interesting to me, after all this Fed hoopla, the stock market's roaring, actually. It was up 400 plus today. I think it's up big 3 straight days in a row. I also noticed oil jumped back up today. We're not sanctioning any more oil or anything, except we're sanctioning domestic oil. So I guess the stock market's not afraid of the Fed. Is anybody afraid of the Fed, Kevin Hassett?
Well, they should be. It's just a question of when. And I think you and I have been talking for months now that we think that the Fed is way behind the curve. They've started way too late. They're going in steps that are too small. Mm-hmm. And what that means is that inflation is going to stay high. It'll probably even accelerate from here. You know, my first pass estimate of what inflation's doing in March, because, you know, the fires in different markets like grains and so on, is that it's now up at about a rate of 20%. Per year, annual rate, if you take the March number. Okay, so inflation is at, you know, South American levels, and the Fed has given us these little 25 basis point hikes. And so why is the market celebrating? Well, it's actually because the value of the firm is sort of the present value of all the profits that they're going to make in the future. The profits are going to be, you know, look higher. The sales are going to look higher because prices are going to run ahead of wages for a while. And the only way that the equity market would go down is if people think that you discount those future profits with a higher interest rate that's so high that the market goes down. And that eventually happens because inflation's not going to go down until the Fed gets interest rates up around the inflation rate. You know, that's the history of this thing. And they're years probably from doing that. And so I think there's a risk of Russia turning us into a recession this year, for sure. You know, exactly what happens in Ukraine is a very, very serious concern for everybody. And of course, especially for the people who are in our prayers at Ukraine. But if that is resolved, then what you're going to see is an inflationary spiral that won't necessarily give you a recession until the Fed decides to act.
Kevin, here's one. You know, Biden is attacking oil companies for excess profits and price gouging. But the producer price index, wholesale prices, is rising, I guess, about 10% last 12 months. The consumer price index is about 8%. So I just postulate, all right, if producer prices are rising faster than consumer prices, that tells me that oil companies and all companies actually have to eat some of their high cost inflation. They're not price gouging. They're actually losing money on this.
Yeah, that's right. And then, you know, that'll get worse and worse for them as they have to drive wages up because real wages have declined. I think year over year, real wages are down about 3% now. You know, and as people go to their bosses and say, hey, I can't afford to keep this job because I'm driving too far to work, you got to pay me more, you know, then that feeds through to prices again. But, you know, these spirals, though, and again, you can see it in equity markets today, in the early stages look really good for equities because wages adjust slowly, prices adjust quickly. And so you know, the costs being subtracted from the revenues, you know, are growing slower than the revenues. And so it looks pretty good. But then eventually, if you have a responsible Federal Reserve, it says, you know, hey, we're not going to turn into a banana republic. We're not going to default on our debt. And so therefore, we need to have sustainable fiscal and monetary policy. Once that happens, like think about what has to happen to fiscal policy right now to make it sustainable. Think about what has to happen to monetary policy to make it sustainable. Both of those things move you in the direction of a recession.
Well, so just quickly, the last few seconds, we're in a stagflation position. That's going to lead to recession.
Right.
It's almost unavoidable. Hate to say it. I don't like that.
Well, yeah. We're going to have very low growth and very high inflation. Yeah. And whether the low growth turns negative or not, it's, you know, 50-50 or something this year. But it's definitely going to over the next couple because eventually the Fed is going to have to do something serious, much more serious than it's planning to do now to stop the inflation from getting completely out of control.
A realistic Kevin Hassett. That's how I'm going to put it. Brilliant and realistic. How's that?
Yes.
All right, buddy. Talk soon.